Hi, everyone. Welcome to tonight's Distinguished Speakers event. Thank you all for coming. My name's Maggie McNamara. I'm the incoming president of the Student Association here at LBS, and it's my pleasure to welcome our distinguished speaker, Tiina Lee, the CEO of Citi UK. She'll be joined by Professor Joseba Martinez from LBS, as well as Brian Dsouza. And so just very quick housekeeping, tonight's event is going to be recorded and probably posted on YouTube to share with your friends. There will also be photos taken. But for now, I would like to hand over to Dean Sergey, who's going to open for today's event. Thank you all.
Thank you very much, Maggie, and welcome. This is your first event as an incoming president, so congratulations on being elected, and also congratulations to your running mate, Tanya, who's also here, right? So, this is one of, as Maggie said, one of the distinguished speakers events, which are very important for us. We are a global business school based in London, and we benefit from this opportunity to bring outstanding global business leaders to LBS to talk to our students, to our faculty, to our alumni community. We here in the room, we actually have not just current students and not just current Citi executives, but also alumni of Citi, alumni of LBS, and like an event diagram both, and as well as current Citi employees who are LBS alumni. So it's very nice to bring together the community of both organizations. We share a lot in terms of values and business models. Citibank is as you know, is a global bank, and not surprisingly, Citibank employs many of our students. For us, it's a very important long-term relationship, and this is why it's so exciting to welcome Tiina Lee, the CEO of Citibank UK, to be the distinguished speaker today. Tiina has been in investment banking and banking business for more than 30 years. She joined Citibank a year and a half ago as a CEO of Citibank UK. Before that, she was in Deutsche Bank, where she also worked as a CEO of Deutsche Bank UK and Ireland. In her distinguished career, she's played many roles in the financial industry, and I'm sure that this conversation will be very important and exciting. I would also like to recognize the organizers, the Student Association. The current president, the outgoing president, Zen, is in the back row. And the Turnaround Management Restructuring Club, and in particular, Brian Dsouza, who is a current student and is a current employee of Citibank, and being assistant vice president. This is a great opportunity and very timely conversation. I'm sure you talk about current events, and Joseba will also share his views on where we are in terms of global economic environment. So I would like now to welcome the panel on stage, so we can hear from Tiina, Brian, and Joseba. Please welcome on stage, and welcome to this event. Thank you very much, everybody, for coming, especially Tiina. Thank you.
Please. All right. Good evening, everybody. It's wonderful to have you all here at the first revived edition of the London Business School Distinguished Speaker Series, a platform where we bring in exceptional leaders who have walked the walk so that our students can learn from them, from their journey up close and personal. Tonight, we are honored to welcome Tiina Lee, CEO of Citi Bank UK, which is part of Citigroup, one of the largest financial institutions in the world, uh, operating across 160 countries with over 16,000 employees right here in the UK. I should probably take a moment to mention that one of those 16,000 is here on stage, trying to stay very calm. Because let's be honest, I've got my CEO to my left, senior management and the dean in the attendance, and to make matters, if I just needed a little extra motivation, my wife is attending too. So I've got a lot of things that I need to get right tonight. So wish me luck. All right. Now, Tiina, I'll have to say this. Coming from a generation that has grown up in social media, we started to glamorize this whole idea of hustle. You know, we wake up at 4 a.m., read a book, run a mile, probably learn Mandarin if you can, and all
before 6 a.m.
Before 7 a.m. Before your competition wakes up. You're already at the top right now, and I want to begin by asking you a simple question: what is a day in this life of a CEO? I mean, do you wake up at 4 a.m.?
I don't wake up at 4 a.m., but I do wake up at 5:45. That's sort of, a bit of a lion. And I would say that actually, as a CEO, genuinely every day is different. So, for example, this week, sadly for me, is governance week. So I've chaired my UK Exco this morning. I have a whole series of board meetings all week. I've got a risk committee. I've got an audit committee. I've got a board effectiveness review. I've got then the actual board where I have a non-executive chair. I have non-executive directors, independent, of course, outside Citi. And that basically just takes me through until the end of the week. So there's always 1 week in a month where I have to focus on what I would say is more the formality of my job, because not only am I the CEO of Citi UK, but I'm also the CEO of Citigroup Global Markets. And Citigroup Global Markets is one of the biggest legal entities that Citigroup has overall, and is the largest legal entity that we have outside North America. And it's a global booking hub, but pretty much for all our businesses apart from US personal banking. So I wear a number of hats. So the thing about senior people is you never just get one job. I have 3 jobs. So I'm the CEO of the UK, I'm the CEO of the legal entity. Oh, and I run banking in my spare time.
Oh.
So that's across investment banking, the corporate bank, and the commercial bank in the UK. So if you want something done, ask a busy person. So basically every day, and Matt will know this because my chief of staff is here, sometimes I can come in and I've got a full day and it goes like clockwork. And it's just back to back to back to back to back. Other times something will happen in the morning, my entire diary just blows up. And all of a sudden I can't do anything that's in my diary because I'm dealing with something that has come up, or there's an incident, or there's a trade, or there's something that needs resolving immediately. So the best thing about my job is it's always different. But what I always try and do is spend a decent amount of my time each week on clients. So let's say 25% of my time on clients. I need to speak to a lot of people internally because given all my various responsibilities, and this industry, I think as everyone here knows, it's a people and it's a relationship business. So I need to make sure I'm speaking to sort of my reports on a regular basis. But then I have external stakeholders as well. So I could be having meetings with government ministers, with regulators, or indeed the media, in terms of external media wanting to find out what is happening at Citi in the UK.
And, just to dig a little deeper on that, Do you have a no phone rule after hours, or do you respond to mail?
A no phone rule.
Yeah. Do you respond to emails after work hours, or is there anything?
I'm always on. I'm always on.
Okay.
First, sadly. So I should have one of those, sort of
The signature.
signatures at the bottom that says, these are my working hours. You do not need to respond immediately. But first thing I do, wake up in the morning, last thing I do before I go to bed, and most of the time in between, sadly. I try and have a break over the weekend.
I hope my wife hears that and she'll let me respond to the emails afterwards.
Oh, really?
Thanks for that. What do you do to unwind? Do you have hobbies, passions, any podcasts, books you read?
I would say in terms of unwinding, it really is just being at home with my family. I like to go to the gym, so if I have time to do that. And I'm a really good sleeper. So that's absolutely key. But otherwise, I'm not really a big one for podcasts, weirdly. I get so much information all the time that actually I don't like to put headphones in my ears and have someone else talk at me. So, but I love books. So I've always got 2 books on the go. One is always finance related, technology related. So anything around AI, quantum computing, big tech, anything, I've just finished a book called Choke Points, if you have seen that book at all, by Edward Fishman, all about sort of how the US has used economic sanctions as a warfare tool. Fascinating, you should read it. But then as a flip side of that, then I really like a good spy story. So I like to keep two going at all the time.
Balances it off, yes.
Yeah.
Now that we have established what the day at the top looks like, I would like to dive into your journey to the top, which, to put it loosely, has been nothing but remarkable. I understand you began your career at a British merchant bank, moved to the Lehman Brothers, which was a big place to get into as a fixed income trader.
Yeah.
Rose to the top to the head of ECP trading.
Yeah, and medium-term note trading.
Yes.
Yeah.
Then you moved to Deutsche Bank and worked there for 26 years, rising to the position of CEO UK and Ireland, as the Dean mentioned. What are the pivotal moments in your career you think that transpired your journey to the top?
I suppose it's as I've sort of been in the industry now for nearly 35 years, I actually find that I measure my time in the industry by financial crises, which I have seen a few. So, everything from, the first time that the Fed raised interest rates in 1994, or actually even going back to when Sterling came out, the ERM, which was in the very first year that I was a graduate at Hill Samuel on the foreign exchange desk, by the way. So that was fun. So everything from Sterling leaving the ERM to the Russia debt crisis to the dot-com crash to obviously the great financial crisis, which I lived through. Given I was covering financial institutions, so that was a very key moment. Everything through to COVID and Russia's invasion of Ukraine. So I sort of benchmark my career in those moments. But I suppose if I was sort of thinking about my career, it was number one, choosing to be a trader, step one. When I started and I started applying to investment banks, at the time, actually corporate finance was the really big thing. So all the grads said, oh, we want to go into corporate finance because that's where the action is. And actually, I went to a drinks, actually it was at Lehman, and I just happened to speak to a graduate that was on the foreign exchange desk who told me, actually, why do you want to be in corporate finance? Come onto the trading floor. And by the way, be a trader because there's no female traders. I didn't even really know what being a trader was, but I thought that sounded good. So, so almost by accident, I ended up doing that. It ended up being the best decision I ever made because once you have traded risk for 12 years, that is a skill that stays with you for the rest of your career in terms of how do you manage risk reward. So I think that was a key moment. Deciding that actually then I didn't want to be a trader anymore, and I was a little bored. And actually moving to the client side. Again, moving away from trading towards client coverage. And then I guess the biggest moment was when I decided that actually I had an opportunity to move away from the trading floor and away from a revenue stream. And if you know anything about sales people and traders, your identity is totally tied up with how much money you make at the end of the day. And to move away from that can be quite scary, particularly after about 20 years. But again, that then turned out to give me exposure on, rather than being a super specialist, it gave me an insight in actually, how do you run a bank? And you'll be amazed how many people who work inside a financial institution have no idea how you actually run a bank. They know their own little bit because, of course, the industry's by definition and by necessity full of specialists. So that opportunity to actually widen my lens is probably how I then ended up in a position where I was able then to be the CEO. So it's probably a long-winded way of saying, I mean, there's so many different moments, but I suppose it's those key decisions you make in a career that move you in a direction that you don't quite know where it's going to end, but actually gives you different experiences.
I mean, the landscape, like you mentioned about the crises, right? A lot has changed. I read one of your interviews. In fact, it was with Ronit Ghosh, one of the future of finance. We have hosted him here as well. And I watched that interview, and you mentioned that when you started off, you used to calculate bond prices in the big box calculators, trade platforms. Okay,
you don't need to rub it in.
I'm just giving context to
fax machines.
Yes, telex, fax machines, and then emails. And no conversation these days is complete without the mention of the word artificial intelligence.
Yep.
At Citi itself, we have a lot of AI that is deployed, Citi Stylus, Assist, which obviously make our life much easy. And very coincidentally, to plug in, today's Citi AI Day. How do you adjust or upskill yourself along the way? Because when you started out, then AI would have seemed alien, right? How do you stay abreast, and how do you upskill along the way?
I think you just have to stay constantly intellectually curious. And I think one of the brilliant things about this industry is that it's actually really easy to do because it's changing all the time. And given that the industry has had so many sort of life and death moments in terms of booms and busts and particular situations, whether it's geopolitics that have come in that have impacted markets or whether it's a little bit more self-inflicted, actually the ability of the industry to totally reinvent itself in the face of really quite profound challenges is one of the things that I find fascinating. So actually that ability to upskill, particularly when actually you are surrounded by specialists. So somebody like a Rohit, we've just actually relaunched, for example, our Citi Institute, where all the Citi Institute does is thought leadership. And thinks about innovation and thinks about the future of finance and actually what does finance look like in 5, 10, 15 years' time. Because nobody really has a silver ball, but actually the more you can be informed over innovation and how things are adapting, the better you can apply that to your daily life. So, for me, something like AI, for example, feels incredibly prosaic, actually, at the moment. So as you say, we have Citi Assist and we have Citi Stylus, which basically is like a summarization tool and enables you to really just pull data out of, let's say, a legal document and find exactly what you need. And on one hand, you might go, okay, well, that seems pretty basic. But at the same time, there is just so much that we ask our young talent to do. People like you, where you join an investment bank, and sometimes you can spend the first year or 2 years doing a lot of number crunching. And I'm sure that there's a vision that you're going to be out there seeing clients and you're going to be on planes and it's all going to be super glamorous. And actually, what I think is that when it comes to something like AI, that it allows that to be a tool where actually our corporate financiers don't then spend 3/4 of their life doing PowerPoint pictures. As an example, you're a young research analyst, you're an equity analyst, using AI to be able to actually pull that information so that all you need to do at the time that actually a company issues their results on the day is actually input those numbers and then adjust whether it's above or below consensus and it's a beat. So actually the way that technology can be used, I think it's incumbent on all of us as senior leaders to say, look, we actually have great tools within our organization. Now we must use them. We have to use them. So, and sometimes it can be uncomfortable. It's like, oh, well, you don't want to use it because you're unfamiliar with it. You don't know how it works. You'd rather use something that you know how to use. We all have to keep that muscle, don't we, around keeping and basically using these brilliant tools.
Thank you for sharing those, your reflections on leaderships and skills. Now, maybe shifting gears a little bit, while leadership shapes an organization from within, the broader economic and financial environment plays a critical role. And with that in mind, I hand over to Professor Martinez to explore some of the big picture trends that have been shaping the financial industry.
Yeah.
Lovely. Thank you, Tina. Thank you so much for those insights. What a time to be alive.
Totally.
And what a time to be CEO of a major investment bank in the UK, a bank that really sits at the kind of next to the beating heart, I guess, of the global economy, pumping out those dollars into the rest of the world, and really you sit on a chair, which is really at the heart of distributing all those dollars into Europe, into the UK, and really like a kind of a vital organ of the global economy. So lots of stuff to discuss. And you said there is no crystal ball for gazing into the future of finance, but we're gonna try a little bit.
Exactly.
So I wanted to touch on a couple of themes, kind of the big things I see happening in finance now. Of course, technology is a very major one, and we talked a little bit about AI already. Yeah. I just wanted to, here are lots of our brilliant students and some of your colleagues as well. And I guess we do have a sense that AI will profoundly disrupt industries like finance, in which knowledge work is such an important component. How much do you see that happening already, and what do you think are the prospects for our young students who will be going into finance? How will AI affect their careers?
Well, number one, there will still be jobs. So that's the good news. Yay! But I think that I touched upon it, that I think the tasks that we ask our young talent to do will change. And because I get asked this question all the time, oh, well, does that mean that there's no jobs? Does that mean that we're going to be letting go loads of people? Actually, when we think about how our firms have built up over the years, there is an enormous amount of activity that we ask young, talented people to do that is around data aggregation, spreadsheets, PowerPoint, because there is no better way of doing it. And actually, as we move into this new world, we do think that, what are the skills that make the leaders of tomorrow? Collaboration skills. How do you work in teams? How do you innovate? What are those, those client-facing skills that you need to actually be a successful banker, salesperson, or a senior leader in this industry? And to be able to free up the time of our young people to spend more time actually with clients, more time working in teams becomes really important. So for me, AI, first of all, is an opportunity to unlock that resource that by definition needs to be doing other activity at this moment. So I think that's an absolute plus. At the same time, I think there's also going to be new roles that are going to be created. As we sort of think about AI, we think about algorithms, we think about the ethics of the activity. So actually, in terms of how do we assess the models that we are using, How do we really understand what AI is doing within our organizations and within our technology? So actually what I see is that there's a whole swathe of new roles that are going to be created that actually don't currently exist. They're being sort of created now as we sort of think about how we evaluate models, and we already do that for market risk, for credit risk. We're going to see that increasingly in terms of the use of AI models as well. So where we see some doors close in terms of those more manual types of activity, I absolutely see more doors opening in terms of actually opportunity that AI is going to offer young talent that comes into financial services.
This is, I'm sure, music to the ears of our students, music to my ears, since my job is to train these students to go and work for you. So, wonderful news.
Yeah.
And I guess AI is one big theme of how technology is changing finance.
Yeah.
And another major one is, I don't know exactly how to describe it, but the rise of maybe a parallel financial system. You know, we're seeing all these innovations in, blockchain-based coins, increasingly. Well, something like a stable coin, which really is just, I guess, a bank that competes or might compete directly in the future for retail deposits and so on. How do you see the integration of this kind of digital financial landscape with the more traditional finance that you're at the helm of? Are they competitors? Are they complements? Do you see Citi absorbing some of those roles? How is the landscape going to evolve?
So I think this is the big topic, and one that is going to continue to be one of these mega trends that we'll see over the next 5 to 10 years. And actually, when I say 5 to 10 years, we know that things are changing almost on a monthly basis. And when I get asked this question, I don't view this as a zero-sum game. It's not like you have to have winners and losers with regard to the traditional banking system versus stable coins or versus CBDC or decentralized finance. Actually, the way I think about it, and certainly Citi is very much got this vision, is you have an entire functioning ecosystem that covers financial markets and financial flows. And how do you effectively digitize that ecosystem such that you can still have the same users and the same providers of that liquidity in those currencies, but in a digital space? So one of the innovations, for example, that Citi has been promoting is the idea of the regulated liability network, which effectively provides different parallel payment rails, whether that be for CBDC, whether that be for stable coins, all on the same rails. So in other words, what you're doing is you're transferring today's financial market ecosystem into the digital sphere. So stable coins is really interesting because when you sort of think about stable coins versus crypto, and of course what's happened very recently in terms of the executive order, in terms of really looking to accelerate the development around stable coins, we believe that stable coins is going to predominantly be US dollar denominated. We've already seen that in terms of the issuance to date. We think there's enormous potential in that place. However, there is absolutely a role for traditional banks as well. So if you think about stablecoin issuers or stablecoins users, what does that mean in terms of traditional banks being able to provide custody? Traditional banks being able to provide banking services to stablecoin issuers, or indeed redemption services for those stablecoin users as well, as they switch between stablecoins into fiat and potentially back again. So in fact, what I see is that there's far more collaboration that is going to be taking place over the coming years. And we've seen that very much in terms of fintechs as well, whereby where we have seen innovation through fintechs, because banks operate in such a highly regulated environment, there is a very large moat around banking activity, and for good reason, whether that be in terms of customer protection, whether that be in terms of KYC and AML controls and effectively sort of control over currencies. But what that actually means, I think we'll have to see. So I think that actually I'm far more positive that when you, for example, do have innovation with fintechs, quite often you found them working in collaboration with traditional finance. And quite often that technology has been bought by traditional banks and actually embedded, and that capability embedded into the existing banking system. So, as I said right at the beginning, I don't see it as a zero-sum game. I think there's an enormous amount of collaboration, not just with the commercial banking sector, but also as we work together with central banks around the world. And we've already seen that with the Bank of England have their pilot around digital assets and tokenization. You've seen the same thing with the BIS, with Project Agora, and there's also initiatives that are happening in the US with the Fed. So I think there's lots of innovation. I think the question is, what's the time to market? And again, just coming back to the Citi Institute, there's a really interesting research piece, which actually only came out today, the breaking news, is actually around, is stablecoins and digital assets about to hit that chat GPT moment? In other words, where there's sort of innovation and all of a sudden it hits a tipping point. So the question is, when does that tipping point come? But I'm very positive.
And so I agree with you. I think it's wonderful that there's all this innovation happening. Maybe we can absorb it into the traditional financial sector. But you know, when I read, I don't know, if I go on Reddit, DeFi or something, you know, they're really coming for you. They say, oh, we're going to replace Citibank in the future. So do you think it's viable? Do you think that we can really, you know, you gave a fascinating answer on the idea that what AI, for example, is going to do is, you know, superpower the human side of banking, right? And in the end, banking is, you know, people get in a room. This is how I understand banking. Okay, so people get in a room, you know, they shake hands, they agree the terms, and it's a very kind of, you know, person-to-person business. Can things like decentralized finance truly replace that? Do you think there will always be a role for that human interaction?
I think there will always be a role for that. I think decentralized finance, I mean, I guess you've got to break it down a little bit, don't you? Is there a role for blockchain, for example, in the financial markets ecosystem? Absolutely. When you sort of think about whether it's smart contracts, where you think about actually the sheer range and scale of legacy systems that traditional banks have, there is absolutely a role for blockchain. Is there a question that it's going to be a disintermediation of the traditional banking sector? We saw steps in that direction, for example, with Facebook very, very early on. I think we're some way away from that. In terms of really that being the main way in which consumers, companies, and central banks are really going to start to sort of move currency flows around the world. So I think that probably the death of the traditional banking sector is not imminent yet.
This is wonderful. So many good news. You bring us so many happy tidings for our future financiers. We've talked. You mentioned briefly regulation and this tipping point with stable coins and with maybe crypto coins as well. I guess a major concern that I have is that as a legacy of the financial crisis, as you said, finance goes from crisis to crisis. We still have this big overhang of pretty tough regulation on the traditional finance system. And then we have this kind of Wild West out there of more or less completely unregulated.
Yeah.
If we hit that tipping point, how do you see the regulatory framework evolving? Are we going to take it easier on you guys? Or are we going to go tougher on them, somewhere in the middle?
So I always think it's a bit of a pendulum. And I think you always have to look pre and post financial crisis. So pre-2007 and post. But now is actually a pretty good time to take a pause and look back and say, okay, what have we got? Here we are nearly 20 years on from the financial crisis. And what you will never hear from a senior leader, I think, of any bank, is a desire to go back to light touch regulation. I think we've seen what that looks like. And I think certainly here in the UK, there is a strong belief that actually strong and credible and predictable regulation makes actually a country and a financial environment an attractive place to do business. So that's step one. However, I think when one looks at the regulations that have come in since the financial crisis, there has been a cumulative impact of that regulation, which now when we look back here in 2025, we go, okay, is this what we really intended when we started in 2008? And we've started to see that, for example, in the UK, in terms of an increased focus on the secondary objective on growth and competitiveness, and therefore the role that regulation can play. And I think what we saw, certainly in the UK, was a desire to almost squeeze all the risk out of the system. And risk appetite went down to all-time lows, and the desire to protect the consumer at all cost was paramount. On one hand, you might go, well, actually, that feels pretty good because the consumer's protected, risk appetite's low. What is the impact on growth? And what is the impact on returns? Not just for actually companies looking to do business or big financial institutions, but actually the man in the street in terms of their pension or in terms of their ISA or where it is that they invest their money. They're going to put all their money in cash because it's safe. That in itself, as we know, is a terrible investment over the long term. So it's a topic which is incredibly live, not just in the UK, but really across the globe. There's lots of discussions around what happens with Basel 3.1. Do we actually get to the Basel endgame? I think there is a desire that actually there is certainty, and hopefully that will happen over the next 12 months or so. But the industry's come a very long way. So here in the UK, there was an announcement only a couple of days ago where the FCA is looking to cut out thousands of pages from its rule book. The PRA is also looking in the same way around how the rule book can be streamlined. And it's really all about how do we drive investment and how do we drive growth. So they're two sides of the same coin. So what I would say is just in terms of regulation is some of it's going to come from the regulators themselves. But at the same time, in the UK, there's a very live conversation going on around ring fencing, as an example. Should ring fencing still be something that the UK banks have to have, where there's a split between the retail bank and sort of their more sort of investment banking activities? Or indeed, has there been further regulation that's come down the pipe over the last 15 years, let's say recovery and resolution planning and living wills, that means that actually is ring fencing now, do we really need ring fencing if we've also got these other tools that have also been applied to banks? So I think that need to take a look. I think there's a new phrase, smart regulation, rather than lots of regulation. Mm-hmm. So in terms of smart regulation, I'm all for it.
Yeah, it's a fascinating point because I think in the diagnosis of why Europe, the UK isn't growing like the US is, we think we have fantastic, talented people here, just like they do in the US. We have great ideas. We have, an entrepreneurial, innovative culture. And I think where we land is that what we don't have is finance, that we don't have those big investment vehicles, VC, PE, et cetera, that are going to really allow European, UK firms to reach scale and to be able to compete with, Chinese and US tech giants, let's say. Yeah. So it seems to me like, we were very hard on you guys after the financial crisis. Mm-hmm. And now we're coming back to you hand in hand and saying, please save us from no growth. And so from your perspective, what are the steps that the UK, Europe need to take? Is there too much regulation now? Should we forget about 3.1? Should we roll back the regulation so that, Citi, other banks, the broader financial ecosystem can emerge and really finance those, hopefully future UK and European large businesses?
Yeah. So it's not just about regulation, though. And I think it's important to note that the UK and the EU start in different places, and they also start in very different places from the US. So if you sort of think about, where finance has traditionally come from, in Europe, it's usually come from banks. In the US, it's come from the VCs, it's come from private equity, and basically entrepreneurs have been able to get that kind of risk capital from investors on their doorstep. So we do start in different places. I think Europe is now trying to reset what they used to call capital markets union and banking union. into sort of the savings and investment union. Let's see how that goes. But I think it involves changing a pretty dramatic change in mindset with a very fragmented banking sector in the EU, which makes it quite challenging to do. In the UK, we have a slightly different set of issues to deal with. The UK has always actually been a fantastic place to start a business. Starting a business has not been an issue. What you will hear from entrepreneurs and people that have fast-growing businesses is actually you can get startup capital. What you can't get is the next stage and the next stage and the next stage. And that is when they're forced to go to the US, because there is an appetite for risk that simply is not there. And whilst we do, of course, have private equity, venture capital firms that have set up in the UK, and actually the UK tends to be the place where they do come and actually set up their European headquarters, the scale of the investment still does not equate to that which is available in the US. How do we change that? There's a couple of things which are happening. But again, this is a really slow burn. If you sort of think about in the UK, for example, the UK actually has the largest pool of long-term capital in the world after the US. But it's highly fragmented. It's fragmented in thousands of pension schemes. So there's very little consolidation, and there's very little consolidation into alternative assets and into infrastructure projects, for example. So that is something which the government, regulators, the industry is trying to change. But actually, that risk aversion has taken place over 20 years through a series of the Maxwellization of pension funds, again, seeking to de-risk what pension funds invested in, to actually a desire to de-risk in terms of managing long-term assets with long-term liabilities, moving away from equities towards long-dated fixed income, accounting rules which have changed. So there's lots of different steps which have sort of got us to a place where actually you have pools of capital that are currently invested in very, very low risk, low returning assets. How do you change that? It took 20 years to get here. Hopefully it's not going to take 20 years to turn that round. But you have to put the building blocks into place. And sometimes when I sort of think about, people can be very impatient and go, well, look, why don't we have this pool of startup capital? Why can't we invest in these companies here today? I think this type of change in attitude is almost generational. Remember in places like Germany, even using a credit card was unusual. Using debit cards were unusual. Actually, it took COVID to accelerate the use of phones and cards in certain places that were never used before. It was all cash. So actually, how you change the mindset of people to actually move towards innovation and to begin to take risks, I think is a challenge in itself. Whereas, of course, in America, you've got less social security, so there's no safety net. Again, probably a factor. Many Americans have 401k pension funds. You've got, in Australia, they have the superannuation pension funds. You've got a culture in which people talk to their friends and family around what they have invested in. That culture is less established in the UK and less established in Europe. So there's a lot of factors, actually, that go into how do you create these pools of capital rather than just saying, okay, you've got to move away from banks towards actually different areas of finance. But it's changing, but it's going to take a long time. Sorry, that was a very long-winded way of saying that actually the problem is very complex, but actually some of the building blocks have been put in place already.
Yeah, fascinating. I'll be honest, Tiina, I just want to ask you about this for the next hour or so, but we don't have that long, and I'd be remiss if I don't zoom out and maybe ask you, putting all these things together, this desire for growth, these impediments, this lack of finance, et cetera, how do you see the prospects for the UK economy generally, for the next 10 years? Are we going to catch up to the US a little bit? Are we going to keep falling behind? Are you optimistic, pessimistic?
So I think it's hard to say that we're going to catch up with the US and anything else is failure. And I suppose up until about January the 11th, we were sort of talking about American exceptionalism. But actually, American exceptionalism is still alive and well, both in terms of the fact that the dollar will remain the reserve currency of the world, the size and the scale and the capability of the US economy is still phenomenal. But that doesn't mean that there are not opportunities for the UK. And now, of course, as you can see in my title, I'm a big champion of the UK. And there are real reasons why I think the UK is a great place to invest. And I don't think we should lose sight of fundamental strengths that the UK has around rule of law, time zone, stable political system, predictable and strong and credible global regulators, which means that this actually is a good place to set up a business and to establish a business that you want to grow from. But that's not to say that there are no headwinds, right? There are considerable headwinds. So even when we sort of think about what's happened over the last couple of months, we see inflation still really sticky. We've seen growth forecasts halve for 2025, down from 2% down to 1%. Labour markets actually still pretty tight. Inflation is still pretty sticky, but we do expect to see 2 or 3 interest rate cuts this year. So actually, when we sort of think about the long term, I think there's still lots of opportunity here. When I speak to companies that are based here, almost every single company thinks international, because that, I think, is one of the big strengths of the UK, and particularly a firm like Citi, where I think you touched upon it. We're so global. Actually, at least half of the revenue that we generate from UK clients tends to be cross-border. And that's not just to North America, that is across the globe. So what I see is actually the UK continues to be a massive jumping off point for international expansion, and indeed for international companies wanting to establish or to build their businesses here in the UK as the decision-making centres for a lot of their international businesses. And we see that all the time, which is why when we think about our coverage model, we not only have clients that we cover out of the UK, but we also have lots of subsidiaries that we cover of Indian, Chinese, American, Middle Eastern companies, and indeed sovereign wealth funds that actually choose to establish here in the UK. So I think there's lots of positives that we need to build on, but short term, there is still quite a lot of headwinds. Long term, so short term, I'm cautious, but I'm long term confident.
Wonderful. What a perfect note on which to handle. Thank you so much.
Thank you, Professor, and thank you, Tiina. I think that the way you ended that part is very comforting. To be.
Come back to me in a couple of months, ask me again.
Will do. One of the things I've come to value both as a student here at LBS and being a part of the team at Citi is just how leadership shows up in different forms. In the classroom, we learn from brilliant professors who challenge us to think harder, see the bigger picture, and question what we know. Then at work, we have managers and colleagues who, in moments of pressure, help us, deliver and be sort of stand up with the situation. But for all of us here, for most of us here in the room, we're still very early in our journey, and we're still trying to figure out what we want to be, who we want to be, and the question is at the back of our mind is, what does great leadership look like? So Tiina, maybe my question is, when you meet young professionals, just for the sake of this, me, for example, what are the qualities that stand out to you? What are the things that you look for to identify and call out and say, okay, this is the guy that I can put my money on, or trust with the job?
Yeah. So first of all, it goes back to subject matter expertise. So when you start in a bank, be the master of whatever area you are in. You have to just know everything that there is to know around whatever area that is, to be the best you can possibly be. So that, I think, is number one, and is almost a non-negotiable, by the way. You can't jump to the next stage until you've got that. But then I think as a senior leader, when I see junior people in meetings or whatever, the thing that always strikes me is when someone is able to communicate effectively. And it's harder than you think, particularly people that are attuned to knowing their audience. Because sometimes you can be asked a question, and actually then your comfort is, well, I'm a subject matter expert, so now I'm going to go down. I'm going to go down deep into this answer. Whereas actually what you need to do is you sort of need to elevate your knowledge. And so people that can communicate complexity clearly is really important. And that's a real skill, understanding how to do that. But also, I think the thing that strikes me around young people, and I sort of go, all right, they're one to look for, again, is people that are not afraid of putting up their hand, wanting to be involved in something, want another opportunity, or just offer to do stuff. You know, they know that I'm working on something, and they go, well, look, if you need any help on this, I've got some time, I'd love to get involved. You know, sometimes don't wait to be asked. Sometimes you need to be asked, but sometimes don't wait to be asked either.
I think I've got a couple of points for my next one-to-one with my managers. So thank you for that.
Okay. No problem, Matt. I think he's in the audience. He's taking notes.
So just to end, my last question is, we did speak about dealing with crises, and it's probably being a student who's graduating now is not the best time because the job market's pretty volatile. Businesses are considering whether they're expanding, need to hire or not. And the question more is about resilience, right? How do you pace yourself around a time like this where you really don't know when it's the end of the tunnel? And what would you suggest to quite a few students in the room? That few interested in banking, others not, but looking for some advice in times like these. I mean, you said you've seen a few crises before. We don't know what tomorrow is going to look like. So what's your advice going to be to us?
So I started my job in the 1991 recession, when interest rates were at 15% in the UK and unemployment was over 3 million. There is no bad time to start, just get going. Right, because you can't be too, in that sense, you just can't be too strategic. Focus on what you want to do. Focus on getting a job at a great firm. Get your head down, start working. And everything else, you know, you'll look back then like I am in 30 years' time, and things that you really overthought at the moment, just get going.
I think on that note, I'd like to thank you, Tiina, for joining us today and giving our students your insights and your gems of wisdom, I'd say.
Oh.
Thank you so much.
Well, thank you so much for inviting me. Thank you.